I came across this clip of Dave Ramsey that people are posting on Twitter because he said something pretty crazy. If you don't know who Dave Ramsey is, one of the biggest finance like influencer type people on YouTube. I don't think he would call himself that. Probably more of like a radio host or something, but he posts his things on YouTube. They're interesting to listen to, but not all of his advice is really sound advice that I think everyone should go by. And especially with him saying things like this, it's just crazy.
And over the last 30 years, my little portfolio of that has averaged over 12, most years over 13%.
Wow, Dave, that's
And,
great.
but I mean, it's not really hard to beat the S&P. The S&P is the average of the market. So what do you want to beat?
That might be one of the dumbest things people could say in finance because beating the market is quite hard. People want to beat the market. If Dave Ramsey is so good that he beats the market over a 30-year period, he should start a fund because he could be a billionaire. You know how much money people would be willing to give you if you could prove that you'd beat the market every single year? Bernie Madoff did this as a Ponzi scheme, and he drew in a lot of people. So if you could do it and have it not be a Ponzi, could you imagine the amount of money that would flow into that thing? So why hasn't he done that if he's such the investing guru, right? And if we look at things like this is goes up to 2021, but you can see the returns for hedge funds versus the S&P 500, and there is one that is really beating the other, and it's not the funds. These guys are not beating the S&P. It should be easy, right? Dave Ramsey says it's easy, so it should be easy. But these hedge funds, they haven't gotten the memo yet. They haven't gotten the memo that it's supposed to be easy to beat the S&P. What are you doing? It's the average. It's easy. I can't believe that he says that, and then obviously the person in the crowd's like, "Wow, that's great, Dave." Like, come on. That's stuff that people who want to sell you something say. Dave Ramsey has an incentive to tell you that he has a great investing portfolio and investing history because he can sell you those SmartVestor Pros, whatever those things are. I'm sure he makes money on the back end of that and makes money based off people flowing into those types of things. And in order to sell you those services, he has to sell you the dream that he can beat the S&P, the thing that no fund managers have been able to figure out consistently. And if we want to look at this, because Dave Ramsey loves the mutual funds, let's see what they did, right? And this is the title, Mutual Funds That Consistently Beat the Market. Not one of 2,132. Not a singular mutual fund has beaten the market. This is over a 5-year period. Not one that these guys looked into out of over 2,000. But beating the S&P is easy. It is very easy. It's the average. You can't be better than average? What are you, crazy? And this is where it kind of breaks this down. These guys found that not a single mutual fund, not one, managed to beat its benchmark in either the US stock or bond markets regularly and convincingly over the last 5 years. So obviously that tells you what you need to know. It's not easy to beat the market because that's the entire thing. If it was easy to beat the market, everyone would be beating the market, right? And then the market would have become whatever everyone's beating with, and that new thing would become the market. But for some reason, Dave's got the magic pill here, and he can get you a mutual fund that beats the market every year. Really, anyone who promises you like great returns and says, "Oh, beating the market's really easy," like that's the easy part, they're trying to sell you something, right? Because that's just never true. No one can tell you what's going to happen. No one can guarantee you that you'll beat the market. No one can guarantee you that you'll underperform the market. No one can guarantee you it'll go up or down. Nobody knows. And if they tell you they know, then they're lying to you. And according to this guy, Paul Samuelson, he was the first American to win the Nobel in economics. He says, it's possible to beat index funds, but it's not easy to do over the long run, and that it isn't worthwhile for most of us to try, which is exactly right. It isn't worth your time to try and beat the market because statistically, you're not going to do it, right? Statistically, it's going to be very difficult to do that. So it's much better for the vast majority of people to just invest in the market, which is the S&P 500. When people say the market, that's really what they're talking about. It's much better to put into an S&P 500 index fund than it is to pick stocks and try and do this and that and all these different things. It's just a lot better and statistically will play out better for you in the long term than trying to beat the market, because statistically almost nobody does that. And if we look down here, they talk about, looking into some of these guys that sometimes you could find one that beats for 1 year or does very good for 6 months or maybe 2 years, right? But this is the problem, right? This is the big problem is if you beat for 1 year, you got to look. The issue is, will this outperformance persist? Another way of putting the question is, are these funds beating the market because they are lucky or because some investors are more skillful than others? Because most of the time when a fund beats the market, they got lucky. Most of the time when a normal person beats the market, they got lucky, right? And if there is some sort of fund that is beating the market I think there's one called like the Medallion Fund that they've done kind of insane, but like they would attract tons of money, tons of investors. People want to put their money there because it seems like they know what they're doing. And if you have some sort of trading algorithm that can beat the market that you've developed, you know how much money people would buy that for just because that it's able to beat the market. If you can prove that it's done that for like 5-10 years, that would be a very, very expensive thing that you could sell to someone who would be willing to pay every penny. But it's crazy to see Dave Ramsey, who is obviously knows what he's talking about in finance and stuff. I'm assuming that he probably has some sort of deal with these SmartVestor Pros that's trying to send people there. And how do you do that? You sell people that it's better than average. It is the best place to go invest your money because it beats the market every single year. And he makes money off of that off the back end. I'm assuming. I don't know, right? Maybe he actually thinks this is the greatest thing in the world. And maybe he's beaten the market every single year for the last 30 years, but he should start his own fund. If he knows how to do that, he could make a lot of money. But as we've seen statistically, these mutual funds that he loves, over 2,100 of them were looked into. Not a single one of them beat the market for a 5-year period or more. Not a single one. So statistically, you're not going to beat the market. Statistically, you're better off buying the market, buying the index, and just simply doing it that way, not trying to pick stocks, not trying to pick mutual funds, just taking it easy, buy the market, and ride it out. That's going to do it for this video. As always, don't forget to smash the like button and subscribe, and I'll see you guys in my next video.